It's June 20th, 2014, current time 10:16 GMT. G. Meisler here with the daily Forex trading update. It's a Friday. Fridays have tended to be thin recently. This one should be no different. There's no data coming from the U.S., only from Canada. We have a better calendar next week, and that is going to be important because U.S. data is going to be closely watched after the last Fed meeting. As for the market, no surprise here. I pointed out yesterday the euro dollar is still within its range. That range comes in at 136.77, 135.03. I said that the key level within this would be 1.3650. We didn't get to it. We've come back. This is typing with a mouse, by the way, and why it shows up this way. 136.50, 135.50 is the range, as I pointed out. So coming back to 136 is not a surprise, at least to me, as long as this level here is not taken out. So we're back to 136 right now in a market which, at this point, the best we can say is a 135 to 137 range until either side is broken. Ultimately, I still see the downside coming under pressure, but only when U.S. interest rates start to move up, and the Fed has kind of neutralized that for the moment. Now, we can discuss that at a later time because there's a risk that the bond vigilantes can take over if the Fed continues to ignore inflationary pressures. So anyway, you got the what you call it, the 4-hour moving the 4 hours trap between the 100 period moving average at currently around 135.96, and the 200 period moving average at around 136.52. So basically, it's almost 135.95 to 136.50. If we take out the 200, I'm sorry, this is 86. My mistake, 135.86, and 86 was the breakout level from Thursday. So therefore, it's a key level. So the 100 period 4-hour moving average is an important moving average. If we now go to the 1-hour chart, you can see we have lower tops. The support comes in here now. Same level, around 135, say 85 or so. So there's support. There's a reason on the 1-hour chart for that. And if you look at the 5-minute chart, 5-minute chart shows a 136.14 as a key level, and if you look, it looks like there's a huge move here. The whole range has been basically less than 40 pips, and just guard yourself when you're within these tight ranges. Small moves can feel exaggerated on a chart such as this. So 136 seems to be the bias setter today. As I said, 135.85 on the downside would have to be taken out, and there's some reason for support from various places there to put 135.80 and 135.50 in line again. Otherwise, no data from the U.S. and therefore a relatively quiet market. If you look here, I wrote this report yesterday. We need a freaky Forex Friday. I will explain why in the report. It's a good one. It's entertaining in a way, but also insightful to show you what this market is like right now and what it would take to turn it. So we need a freaky Forex Friday. Good luck and good trading.